Okay, welcome to another episode of ICAN-ngr. Today is the 27th day in the month of March 2025. To see salary period, and I believe our colleagues are excited because we're wrapping up the Ramadan season and also the Lent season. I want to say thank you very much, everyone, for joining the program today. My name is Fumi Olani, and I'm so excited to be here. And of course, I have the one that is always with me by my side on the program and everywhere we go. All right, Tosin, it's good to be here again.
Thank you very much for me. Today being the 27th day in the month of March 2025, it's another episode for ICAN-ngr. I'm Tosin Akinwumi, and together we'll be taking you on today's edition. And what exactly are we looking at today? Implementation considerations of IFRS S1 and S2.
Okay.
And what will be doing that for us? It's S1 member, a queen in the house. Let me allow you for me to take over and introduce to us.
It appears there's a glitch from Tosin's end. Just to say thank you very much, everyone, for joining the implementation consideration of IFRS S1 and S2. And we're quite excited to be here today. And we welcome again, everyone, and please inform from your friends to join the program today. We have a table guest in the I don't know if it's my network or their network.
I can hear you, Fumi. I can hear you.
My own phone.
Fumi, I can hear you. Go ahead. Okay, I think there's a network glitch for Fumi there. So you're welcome. Today we are looking at implementation consideration of IFRS S1 and S2. And of course, trust us on ICAN-ngr that when we are looking at a subject matter discussion, we'll go for a subject matter expert, especially as far as sustainability is concerned. So I have in the house a distinguished professional, a subject matter expert, an able and seasoned coach, and the MD of IQ Strategies in person of Grace Fatogbe FCA. Madam, it is a pleasure to have you in the house.
It's my pleasure to be here, Tosin. Thank you for the warm welcome. Thank you so much.
You're welcome. You're welcome. Like I did say, you are a big fish as far as sustainability is concerned. You are an albino and easily you are recognized in the market. Now, today we are looking at the topic implementation considerations of IFRS S1 and S2. Whenever we are looking at technical topics like this, especially when it comes to standards, I know a whole lot of people consider it boring to say standards again. What exactly is all of it? But we have these experts, and you are one of them that when you talk about standards, you make it like butter and bread. You make it so simple and easy for people to comprehend. And I trust that as we discuss today, you will also take us to the dimensions of the implementation considerations of IFRS S1 and S2. And let me quickly take your brief profile so that our audience can actually know whom Grace Fatogbe is, and we can actually know you and know you better. Grace is a financial and sustainability expert with a strong background in global digital financial and sustainability reporting. In terms of your general qualifications, she is a fellow of ICAN, recognized for exceptional expertise in sustainability reporting. She is a certified project management practitioner, Prince 2, demonstrating proficiency in strategic project management. In terms of academic excellence, she holds a BSc in accountancy from the University of Maiduguri and awarded as the best graduating student from the Department of Accountancy. She also holds MSc in finance and management from Cranfield University, UK, funded by the prestigious Chevening Scholarship. In terms of award and recognition, Grace is an outstanding staff, bagged an outstanding staff award, Banking Supervision Department of CBN. Like we usually let you know on this program affords professionals and business owners to showcase their goods and services. So come with your adverts at a cheaper rate and let us run it all together. So once again, Grace Fatogbe, it is a pleasure to have you on this show. And I say welcome once again to ICAN-ngr.
Thank you so much, Tosin. It's my pleasure to always accord my prestigious institute, the Institute of Chartered Accountants, my time. And this is a topic I'm very passionate about. So it's my pleasure to be here with you this evening.
Okay, the pleasure is also ours. Now, before we launch straight into the topic, let's go and run some commercials because we have people who are partnering with us on this program. And like I just mentioned now, it is affordable. Professionals, businessmen can actually come with us and let us embrace this program in terms of bringing their commercials. So let's quickly go and run some commercials. We'll be right back. Don't go away.
Navigate the complexities of our nation's economy. It is clear that the current crisis presents both challenges and opportunities. The question now is, how can we unlock the potential for growth and for prosperity? Join the ICAN Eastern Zonal District for a 19th Eastern Accountants Conference, Umuahia, happening from 1st to 4th of April 2025. Venue is International Conference Center, Umuahia. This year's theme is focused on Beyond Nigeria's Economic Crisis, Unlocking Opportunities for Growth. From exploring new frontiers in finance and technology to rethinking our approach to economic development, we will explore the bold ideas and practical solutions needed to propel Nigeria forward. For this conference, we'll have some special appearances like special guest of honor, His Excellency Dr. Alex Chioma Oti, OFR Executive Governor of Abia State. Chief host, the Diamond President of ICAN, Chief DCS Alaribe, FCA. Host, Dr. Silvanus Ailego, FCA Eastern Zonal Chairman. And for more inquiries, you can reach the conference chairman, Chief Sir Michael Iro Ibe, FCA, on 080-3196-5390, or the conference director, Elder Unana Daniel Ukbai, FCA, on 080-3879-3014, or the conference accountant, Pastor Oliver Obunaya Udensi, FCA, on 080-886-10350. To register, please visit www.icanezdconference.org.ng. Announcer, Professor Luke Chukwu, Chairman, Education and Awareness Committee. Together, let's unlock the potential for growth and prosperity.
Seed.
She has the skill to move financial mountains.
So can you with ICAN and the CGMA designation.
To lead finance in Nigeria.
He's ready to become a finance leader.
So can you with ICAN and the CGMA designation.
All right, you are welcome to ICAN-ngr. And like I said before we went on the commercial, we are looking today on implementation considerations of IFRS 1, S1, and S2. And we have in the house the MD of IQ Strategies, Grace Fatogbe, FCA. So let's launch deep straight into the discussion. In terms of the strategic readiness and governance of this topic we are talking about, have we established clear internal governance structures to oversee sustainability and climate-related disclosures?
Thank you so much, Tosin. Before I respond to the question about establishing adequate governance to oversee sustainability and climate-related disclosures, I would like to start by defining sustainability because we may have some people who have joined us and have never heard the term sustainability. So what exactly is sustainability? I like to define things by looking at the root word so that it's really simple for people to understand. So if we look at the root word of sustainability, it is sustain, and sustain simply means for you to maintain something, to continue to exist. If we look at that definition of sustain, it's very similar. In fact, it is the same thing with a very well-known accounting concept, and that is going concern. So when you talk about sustainability, what we're simply saying is that as a business, your ability to continue to exist, to offer the goods and services that you naturally would offer. As accountants, when we look at the going concern concept, we're focusing more on the financial dimension, the revenues, the expenses, the assets and liabilities. So what sustainability is now saying is that beyond those financial metrics, there are some non-financial indicators that could actually either help you remain a going concern or can impede your ability to remain a going concern. So sustainability in a nutshell is anything that can impede your ability to remain a going concern. So there are three pillars of sustainability. We have the economic pillar, which is what we're very conversant with as finance professional, the profitability index. Then we have the environmental pillar. You're looking at things that are naturally existing, like water, air, and that can either help you remain a going concern or can impede your ability of being a going concern. And then finally, the third pillar, which is social, the human interactions that can either accelerate your going concern or impede your being a going concern. So now back to your question, Tosin. How do we establish clear governance structures that oversee sustainability and climate-related disclosures? The IFRS S1 requires that you have a governance structure around your sustainability reporting and your sustainability practices. And what is this governance structure? There must be board oversight over sustainability-related disclosures. And the board oversight can either be within your existing board committee, or you could establish a unique board committee that oversights sustainability. So in my interactions consulting with clients, I have noticed that you have some organizations that embed the oversights, the governance structure around sustainability within their existing board committees. And the typical committees where they embed this is either the board audit committee or the board risk committee. And then you have some dimension of organization that decides to set up a unique sustainability board committee that has oversight over only sustainability issues. So which do you choose? You now need to look at your business operations, your scale of operations, and see which is the best suited for you. But the most important thing is that you must have board oversight over your sustainability related issues. And when we're talking about sustainability, we're looking at the three dimension. The economic dimension, you already have that sorted as finance professionals. The financial dimension is already sorted. So what you're now bringing on board is looking at the environmental dimension and the social dimension. How do we embed this within our existing governance structure? And another thing that is good to notice is that it's not just about setting up committee and calling it a board committee that has oversight over sustainability. Those charged with oversight of sustainability must understand sustainability. If they don't already have the capacity, then you need to train them so that they understand sustainability. So it's not just by saying, I have a board committee that oversights sustainability, but that this committee actually has the skills and expertise that they understand sustainability. And when they're making decisions on behalf of the organization, they are putting into context how the sustainability issues can either prevent them from achieving their business objective or how they can leverage upon them to improve and meet their business objectives.
Okay. I can imagine that some people listening to us now will say, I hope it's as simple as the way Grace is explaining. Though, I mentioned to you that you know how to make it simple, look simple, just like bread and butter. But I think that's why we are here today, to actually learn and understand the rudiments of IFRS S1 and S2. And now my follow-up question with this is that whose responsibility is sustainability reporting in an organization? Who does this sit with? Does it sit with the finance, the risk management, or is it a cross-functional function among a team? Let us know who has that responsibility of giving a sustainability reporting in an organization.
So the optimal sustainability function within an organization will be a cross-functional team. If you recall my explanation of the pillars of sustainability, you have the economic pillar, and that's expertise purely sits with the finance professionals. They understand financial indicators, they understand how things can impact our revenues, our expenses, our assets and our liabilities. Then we have the dimension of environmental. When you're talking about environmental, you're talking about waste management, air pollution, greenhouse gas emissions, and we're now looking at the realm of things that are outside the expertise of accountants. Then social, we're looking at interactions of human beings, both internal, so we're looking at employees, and external, you're looking at your customers, your suppliers, the communities within which you operate as a business. So for the internal social dimension, human capital would have the expertise to be able to explain issues related to your employees. And then when we're looking at the external dimension, corporate communications would have the expertise for you to explain your interactions with your communities, and then with your customers, it will be customer service. So a cross-functional team is the best, and the organization can then choose to embed sustainability either within finance, risk management, or some organizations actually have a distinct sustainability department. But wherever they domicile this, whoever is in charge needs to understand that he cannot understand all of these issues and must leverage the subject matter experts within the organization. Just like in financial accounting, that we leverage the expertise of valuers, engineers to value property, plant, and equipment, it will be the same thing replicated when it comes to sustainability reporting. So in my interaction with clients, I have seen some organizations that domicile sustainability within their finance function. Some put it within enterprise risk management, and some still have a distinct sustainability department. So as a business, you need to look at your operations, your scale, and your size, and determine where exactly do I want to domicile sustainability. But irrespective of where you domicile it, there's a need for collaboration across cross-functional team, because sustainability has several dimensions, like I mentioned, the environmental, the social, the governance. And so not one person would have all of the expertise to actually be able to do a good job in embedding sustainable practices within the organization and also reporting this.
All right. All right.
Thank you very much, Ma. And it's been an interesting one, because sometimes when you hear this subject matter, it feels like you're going to go, we're heading for the hard rock. But yeah, you made it so simple and seamless, like Tosi had mentioned. But for me, how do you then determine what sustainability or climate risk, how they are material to our business in line with the IFRS S1 and S2 that we've been talking about here?
Thank you so much, Fumi. That's a very interesting and germane question. The IFRS sustainability standards actually requires the disclosure of material sustainability risk and opportunities. So it's not every sustainability issue that you need to disclose. It has to be something that is material to you as a business. So what exactly is the definition of materiality? What is considered material by the IFRS sustainability standard? So for all finance professionals, it will not be something new. It is not a new definition. It's actually exactly the same definition that you find in paragraph 7 of IAS 1. And that is, something is material if, when you omit it, misstate it, or obscure it, it could reasonably be expected to affect the decision that primary users will take. And primary users, as we know, are existing and potential investors, existing and potential lenders, existing and potential other creditors. So something is material if it can impact your cash flows, either positively or negatively. It can impact your cost of capital either positively or negatively, or it can impact your access to finance either positively or negatively. So how do I even identify what these material topics are? The IFRS S1 in paragraph 54 tells you go to IFRS sustainability standards to get what the material topics are. But as of today, we only have two IFRS sustainability standards. The IFRS S1, which is just providing you with the foundation, the principles, the concepts of how to report your sustainability issues. Then the IFRS S2, which focuses on climate-related disclosures. So it means that when you go to the IFRS S2, you will see a list of things that are considered material when it comes to climate-related disclosures. So where do I get the material issues for things outside climate? IFRS S1 paragraph 55 refers you to the Sustainability Accounting Standards Board, industry description. So if I'm an insurance company, I will go to the industry disclosures for insurance company, and then I will see a list of what is considered material. So I've been able to gather a bucket list of what is material from the IFRS S2 and from the Sustainability Accounting Standards Board for insurance industry, which is my industry. So I have a bucket list of what is considered material. This bucket list does not automatically become material to me as a business. I now need to sit down and do my materiality assessment to identify if those bucket lists can actually impact my cash flows, my cost of capital, or my access to finance. How do I do a materiality assessment? I simply do a survey or a focus session with my stakeholders, both internal and externals. My employees, my board, my executive, my external would be my customers, regulators, just anybody that is external, and ask them to rank this bucket list of material topics based on how they think it will affect my financial performance. Then I will collate all of this ranking from the various stakeholders, do a materiality matrix to identify the most material issues for me as an entity. That way, I've been able to identify out of this bucket list, if the bucket list, for instance, is 30, it might just be 5 that actually has an impact on me as a business. And it is just those 5 that can impact my cash flows, my access to finance, and my cost of capital that I'm expected to report on. So in a nutshell, your first port of call is to go to the IFRS sustainability standards to pick a bucket list of what is material. Where there's no IFRS sustainability standard for that specific topic, you go to the Sustainability Accounting Standards Board. The IFRS S1 also allows you to pick topics from your industry practice. Why is that so? The standard itself is a global standard and might not necessarily take into cognizance local context. So there might not be things that are unique to Nigeria that are sustainability related. So for that, to get Nigerian context, you can look at what your peers, the people that are in the same industry, what are the issues that are material to them? What is my regulator in Nigeria requiring me to disclose that can impact my finances? So you look at industry practice to bring in the local context. And by the time you've brought in all of this, you do a materiality assessment with your stakeholders to identify what is actually material to you. So a key takeaway is that material topics are entity specific. You don't just pick what is in the standard and report it simply because the standard says it is material. No, you have to identify if it actually affects you as a business.
Interesting, but you said so much, right? But I just wanted to also understand what the processes are in order to be able to assess the financial impact of this climate risk and opportunity. If you can just help me understand that so that I then have a visibility into what the climate risk and opportunities are.
Okay, so for instance, a climate risk would be carbon emissions. How can it affect you as a business? and we want to see the financial impact on you as a business. Nigeria actually has a Climate Change Act, which was enacted in 2021, that says that they would allocate carbon budget to both public and private entities. What that means is that there are amounts of carbon you can emit and there will be no penalty. And when you exceed that, your budget, there is a penalty that will come into place. Right now, that act has not yet been operationalized, so nobody has a carbon budget. But the IFRS sustainability standards says you should take into cognizance things that can affect you now, in the medium term and long term. So because you know that that act exists, you know that one day it can be operationalized. So you now need to identify it as a potential risk. And we do not yet have the price for the penalty. So what you can do is do a search online to see how much are they charging for carbon emissions globally, maybe $100. And now say, okay, I'm currently emitting 1,000 metric tons of carbon, and I estimate that my budget might be 500. So I have an excess of 500. So you multiply that 500 by $100, and then you're able to see clearly, this is the implication of this Climate Change Act when it is finally operationalized. So that's one way to look at it. Let's take another example from the social dimension. Employee engagement. Employee engagement, the higher the engagement, it means the happier your employees are to work with you. If your employees are happy to work with you, to come to work, it means that productivity will be high. If you are a professional services firm, it means that if you have a client's deliverable, you'll be able to deliver within time and get more jobs done. So you can clearly calculate and say, because I have a highly engaged team, my revenues are likely to go up by 10%. And you can clearly link that to a social dimension. So the most important thing is first identify the issue. Once you identify the issue, the next thing is see this particular sustainability issue, how can it impact either my revenue or my expenses? And then estimate based on the information that is available to you. This is how it can either make my revenue higher or reduce my revenue, because if your staff are leaving, your revenue would be impacted negatively. If you've trained someone, you've spent so much money training the person, and then tomorrow he leaves, it means that your expenses is going to go up because you have to train another person, simply because you have not taken into cognizance the social dimension of making sure that your employees are well engaged and they are happy to come to work.
Wow, wow, wow. This is really a case of taking us back to the classroom, And personally, I'm not surprised because one of those who have created a niche.
I think I should just go by Upswan. Yes.
Yeah, raise the salute.
Well done, my queen.
Raise the salute for me. Let us salute together.
Upswan, up ICAN, Upswan, women of integrity. Right on, Queen Grace.
Well done, well done. As I was saying, I'm not surprised at all because Grace is one of those who have created a niche for herself in sustainability. Before we continue in these questions, let's quickly go and see our audience, because without them, there would certainly not be ICAN on here. If you are here talking to me and Fumi, trust me, maybe it may be boring, but a whole lot of others are also here joining the program, and I'm sure they are finding it interesting. Ademola Isaac has joined us from the University of Ilorin. Pete Remy Izugo from Delta State. Fag Bolate Mitope Adeniyi from the ancient city of Ibadan. Adejo Bamidele Igbita, all the way from FCT in Abuja. I have Akpalahame watching us from FCT in Abuja too. Lolum Binde, all the way from Benue State. Aziz Irubo from Kwara State. Goodness Okezie. Suraji Ibrahim from Lagos. Goodness Naji. Yusuf Edu from Lagos. Bibian Hike, and all. A lot of people are on this show actually following
In
us.
fact, Jose, I wanted to just mention someone else that I saw. He said his name is Indobisi Edward. And he says, "Good evening, professional colleagues." Is he our professional colleagues here? But it's okay. He said, "I'm Edward Indobisi Jackson, a newly chartered accountant waiting for induction in May 2025. I'm streaming from Ughelli, Delta State." You're welcome to the profession. Congratulations to you.
Wow, that's a good one. Ndobisi, you're welcome. I hope before your induction, you are already learning and gaining the rudiments. Please follow us on this program, and I trust and I believe you will certainly learn and learn beyond your expectations. So, let's continue. We are still talking of implementation considerations of IFRS S1 and S2. And now, Grace, let's look at the data collection and systems. My question would be, do we currently collect reliable ESG or climate-related data? If not, what systems or partnerships do we need to actually aid us in collecting reliable data?
Okay, that's actually a really excellent question to see. One of the challenges with sustainability reporting is actually data collection. Now, the issue is that some of these issues when it comes to sustainability are not as, how do I put it, are not as strong as when it comes to financial. Everybody knows what information to collate when it comes to your revenue, to your expenses. But when you go to the non-financial dimension, you're struggling to see, okay, for employee, what specific data do I even need to be reporting? So data is actually a huge challenge. Nigeria currently does not have a database of the some climate-related information that you would easily need to do your sustainability reporting. But there's a process you can follow to be able to at least get some of this data available to report. The first step is what we have discussed extensively, which is even identifying the sustainability issues that are material to you that you need to report. Once you've identified the sustainability issues, the next step is to identify if you are already collecting that data internally. If you're already collecting that data internally, you've solved 50% of your challenges because that data is somewhere within your organization, but it might not necessarily be in the formats that you need it for sustainability reporting. For instance, within our financial reporting, we collate the costs of fuel, diesel, petrol for the motor vehicles, diesel that you use for powering your generator. That information is actually helpful and useful when you come to greenhouse gas accounting. But the format you will have it in financial reporting might not necessarily be what you need for greenhouse gas accounting. What you will have in financial reporting will be the cost of the diesel and the petrol, etc. What you need for your greenhouse gas calculation is actually the volume of diesel, not the cost. So once you've identified that that information is already being collated, the next thing is that the format in which it is currently being collated, is it useful for sustainability reporting? If it is not useful, it's just for you to update your data collection mechanism to say, when you are recording the cost of diesel, please include the volume, so that when I come to collect information that I need for my greenhouse gas calculations, I would see exactly what I need. Now, where you are not even already collecting that data at all, what needs to happen is for you to even identify what data specifically do you need and what templates should you even use to collect that data. You can start by using Excel. Luckily, the standard takes into cognizance the fact that we're not all at the same pace. We don't have the same resources. We don't have the same capabilities. So if you don't have money to invest in a software that can collate sustainability data, you can actually track that information within an Excel template. And then there are available databases that you can collect some of the information that are not available. For your greenhouse gas calculations, you need two data. One is the activity that is generating the emissions. In the example I gave, when you burn, combustion of diesel happens to produce electricity. It is the diesel that is burnt that emits carbon and that does carbon emission. So you've identified that diesel is something that when it is combusted, it converts into carbon. The next thing is you need an emissions factor to multiply with the quantity of diesel that has been consumed. That emissions factor, you can go to the Greenhouse Gas Protocol website. They have emissions factor, but not necessarily specific to Nigeria.
Okay.
Because we don't have emissions factor for Nigeria, you now need to pick an emissions factor that might be for another country. The standard allows you to use judgments. So you now say, as management, I have picked the emissions factor for instance, UK, because that of Nigeria is not readily available. But because UK is different from Nigeria, I'm either going to discount it by X% or add a premium of X%. So you've clearly been able to go to an existing database, collect data that you need for your calculation, but then use your management judgments to say, I'm adjusting either a premium or a discount to account for my unique situation in Nigeria. Once you've collected data, the next thing is how do you now integrate this information within your existing financial reporting process? And then that can be done in collaboration with your IT team to see how this data that we require for sustainability reporting can then be integrated into financial reporting, because a lot of the information you need will be coming from your financial reporting so that you're not reporting them totally separate. And you could consider collaborating with industry peers, coming together and saying, oh, this emissions factor for Nigeria is not available. Can we, as manufacturing industry, sponsor a study to come up with what the emissions factor for Nigeria is? And you can leverage the Institute of Chartered Accountants and say, oh, this particular data for sustainability is not available. Can ICAN champion some studies to be able to generate this data so that it's available for chartered accountants to be able to come to ICANN's database and make use of this data? So that's how you can address the data collection challenge, but you can only collect what you understand. So having sessions like this organized by ICAN makes people understand, okay, these are the issues, these are the data I need to collate, and then you now begin to set up the systems and processes to collect the relevant data.
Thank you very much. I mean, you said so much, and I believe our audience are excited to learn more when it comes to sustainability, IFRS S1 and S2. So, but my question is, are we truly equipped to perform climate scenarios in this ecosystem, this world that we are? And what tools, or perhaps I should say, perhaps consultants, what type of consultants can help us model this physical transition risk that is in all these climate scenarios that are being painted by you?
An amazing question, Fumi. So I would start by explaining what the transition risk is so that people who are hearing it for the first time actually even understand what a climate-related transition risk is. A transition risk is a risk that is arising simply because the world has decided we want to reduce carbon emissions. So it will be driven largely by regulations, like the Climate Change Act I mentioned. So transition risk will be things that are coming because of regulation to push down carbon emissions, or it could be that the particular technology you've been used to using is no longer available because people are reducing their carbon emissions. So an example can be, you want to buy a diesel generator, but you can no longer find a diesel generator because the people that manufacture diesel generators are no longer manufacturing them. So those are transition risk. Physical risks are actually the risk coming from the actual impact of climate change. So there will be things like flood, Are we experiencing more floods, and are these floods destroying your business operations and making it impossible for you to continue to offer your goods and services? So back to your question on scenario analysis. Scenario analysis simply means that as a business, do various scenarios and see how this transition risk or physical risk can affect either your revenue, your expenses, your assets, or liabilities. So, are we equipped to perform climate scenario analysis? It's a yes and no answer. It's no, because some people may not even have the resources and capacity in-house to develop complex scenario analysis models. But some other organization may actually have the financial resources to bring in the best consultants from around the world to help them develop a scenario analysis model. And that's why I like the IFRS sustainability standards. It says that your scenario analysis should take into cognizance the kind of capacity you have and the resources you have. So if you don't have money or your staff does not have the capacity to do complex model, please use description, narration. Just say, I believe based on my understanding of my business, this climate related transition risk, when it is operationalized, will reduce my revenue by 10% without doing any complex models. And gradually, you build the capacity of your staff by training them to be able to do complex models. But if you have the capacity and resources, you actually have consultants who are experts in helping you develop scenario analysis. We have these experts within our profession, and they can help you develop scenario analysis. So that is, in a nutshell, how you can go about performing climate scenario analysis.
All right. Wow. This is deep. Let me make a confession here, Grace. See, by our training as anchors on this show, if your response to a question is going beyond a minute or two thereabout, we have a way of coming in to let you know that you are overrunning that response. But I'm telling you the truth that between me and you and Fumi here, we are glued to your response, such that even when you are spending 3 minutes on a response, we are learning and we cannot stop you. Fumi,
We don't mind.
Am I speaking your mind, Fumi?
Well, that's the truth, Tosin. You've said it well.
Thank you.
Exactly.
Thank you so much.
Exactly.
Thank you.
Well done. Great work you are doing.
Thank you.
So let us now look at the link between financial reporting and then sustainability. How do we link sustainability and climate disclosures to our financial statements? How do we link these two things? And then the follow-up question there is, are our finance and sustainability teams working together to align disclosures under IFRS S1?
Okay, so the first question, how do you link your climate-related disclosures to your financial statements?
Yeah.
If we recall, I did mention that you're reporting only sustainability issues that are material to you from the financial dimension. So it has to be something that can impact your cash flows, your cost of capital, or your access to finance. So if you identify a sustainability issue as being material to you, your focus is, how does this thing impact my cash flows? Remember, your cash flows will be either inflows, revenues, or outflows, your expenses. If I decide as an entity that I want to reduce my carbon emissions, and because of that, I get a solar panel to power my operations, it automatically means that if I had been using diesel generator, I would no longer require diesel generator, or my diesel expenses will come down. So the relationship is that the reduction in my diesel consumption will be reflected in reduced expenses. So you can clearly see the correlation between the sustainability decision you've taken and your expenses. Another example could be, I am selling diesel. That is my business. And then I notice a decline in sales. I would be able to check and see, is this decline in sales largely because people are switching away from diesel to solar? So you are able to clearly see that a decline of 10% in your revenue is clearly linked to a sustainability issue. Another example could be you purchase a solar panel. The cost will be in your PPE, your property, plant, and equipment. So you can clearly see that that investment in solar panel is a direct correlation with your sustainability issue. And another requirement for disclosure is, how does each of these sustainability issue impact your financial performance? So we look at your balance sheet. Are your are your liabilities increasing simply because of a sustainability issue? Or are your assets declining because of a sustainability issue? If we take an oil and gas company that is into oil exploration, one of their significant assets will be their reserves, the oil that is still on the ground that they've not yet brought out. There's a complex way that they value this, but one of the parameters is the potential cost at which they will sell this crude oil when they eventually extract it. If because of the concern to reduce carbon emissions, the prices of crude oil is declining, they can automatically see the impact on their financial statements. So in a nutshell, each sustainability issue, if you actually analyze it, looking at how it can impact your cash flows, your cost of capital, or your access to finance, you'd be able to clearly see the correlations with your financial statements, whether it is resulting in an increase in your revenue or a decrease in your expenses. And if it is increasing your revenue and decreasing your expenses, you automatically know that you're going to be seeing increased profitability.
Thank you very much, Ma. I see a lot of questions from our audience, and I would like to pick some of them. And I want to take the one from Michael Kehinde-Oladega. He says, how can we access the sustainability impact of artificial intelligence in business operations?
Okay, so that's an excellent question, Michael. How can you assess the impact of artificial intelligence in sustainability operations? So artificial intelligence can either accelerate a positive sustainability opportunity for you. For instance, if you are offering a product and you're able to embed artificial intelligence to be able to understand exactly what your employees need or what your customers need, it will be translated to improved employee engagement for your employees or increased revenue with your customers. So it's just you identifying this artificial intelligence. How can it accelerate the achievement of a sustainability dimension? If what you're interested in, for instance, is reducing carbon emissions, there are two ways in which you can remove carbon emissions from the atmosphere. We have the natural based solution, which is planting trees. When you plant trees, they take out carbon dioxide from the atmosphere and they release oxygen. Then you have the technology-driven way of reducing carbon emissions. So if you've chosen to go the technology way, you can actually embed artificial intelligence within a particular tool to be able to identify carbon dioxide and take it out of the atmosphere. And that artificial intelligence will be able to tell you, without you crunching numbers, to tell you that, oh, this is a quantity of carbon you have taken out of the atmosphere. So that's how you can leverage artificial intelligence to assess the impact of sustainability on your operations.
You know, just to ask a question, because that's the industry I operate. It's a similar question as was asked by Michael Kehinde. He says, from Fola Afuakpe, he says, how can we access the sustainability impact of fintech?
Okay, so let's take one of the social dimension, looking at fintech. Fintech companies would have customers' data, their personal data. You need to collate some of customer data to open accounts for them. For instance, if we're looking at the fintech companies that actually serve as payment gateways or platforms, a sustainability dimension when it comes to that will be, how do you ensure that this customer information, confidential information that is within your business is kept in a manner that it does not fall into the wrong hands? For instance, you have my NIN, you have my BVN, and all of that. Under the social dimension, that is known as data privacy and data security. So the data security angle is, how do you ensure, what protocols do you have in place to ensure that that information is not hacked into by a wrong person and then used it to do, for instance, identity theft and commit a crime with my data? Another dimension is data privacy. You have collected this information from me that you're opening an account for me. But then you now go and sell this data to a third party to be bugging me with adverts. Come and buy biscuits, come and buy tomatoes. So that is a challenge when it comes to how you're managing customer data. So that's one of the issues that will be very relevant to fintech. Another dimension will be, you use data servers, I assume. Fumi, a fintech company will have data servers, right? Data servers are actually known to consume a lot of electricity. And that heavy consumption of electricity affects natural resources. There's water that is used to cool down the data centers. And then the fuel that is used to generate electricity for those data centers could actually be emitting carbon emissions. So the more data you're keeping, the bigger the data server you need. So it means that your carbon emissions will be higher because you would need to generate a lot more electricity to ensure that you're keeping those data servers on 24/7, because you can't switch them off. So that's how fintech can actually affect sustainability.
Thank you, ma'am.
All right. That's a good one. I think that's for Fumi in particular. I will have asked that she pays for that response because he's already serving the institute on this program. So Fumi, don't worry, you won't have to pay double because you're already serving your institute by you being an anchor on this program. Thank you very much for that response. Let's now look at another area of sustainability in terms of capacity building and training. What internal capacity gaps do you think exist in understanding or implementing IFRS S1 and S2?
So one of the critical gap may be that people might not even understand how to identify what is their material sustainability related risk and opportunity, which was a critical point that Fumi raised earlier on in this session. So that's a capacity gap, because you can't just go and copy and paste and say, this is material to me. No, you have to identify how it is material to you. How do you even trace back and say, this employee engagement, this is how it affects my revenue or my expense? So that's a gap. And then how to link those issues to your financial statement is another gap that would exist, because people might not even really know how to link data security, data privacy, greenhouse gas emissions to how it would affect their financial statement. And then data collection. What data exactly do I even need? Because if you don't know what data you need, you may collect the wrong data. So those are some of the capacity gap. Some people do not even understand what sustainability even is. So they don't even know what the sustainability risk and opportunity are generally. And when you don't understand a subject matter, then it is almost impossible for you to actually be able to integrate sustainability within your business, and then identify the material issues that can actually affect your financial performance. So on a general note, those are actually some of the capacity gap. And some people haven't even taken the time to read the IFRS sustainability standard, so they don't understand what is in there. So they are basing their understanding based on hearsay. Fumi said this, Tosin said this, Grace said this, but have you actually checked the standard to see what exactly the standard is saying?
Okay, and lastly from here, as a follow-up question, within just a few seconds, what training or technical assistance do we need to strengthen our sustainability reporting processes?
ICAN is doing a lot of work regarding that. They're doing several webinars. We're also here by virtue of a platform ICAN has provided, trying to create awareness around the IFRS sustainability standards. And so you can leverage on the numerous sessions that ICAN has, the webinars, the in-house capacity building around sustainability. Then also the IFRS Foundation itself has a knowledge hub where there's a lot of information regarding how to understand the IFRS sustainability standards and how to implement it. So you can leverage on a number of resources coming from ICAN, from the IFRS Foundation itself. The Financial Reporting Council of Nigeria is also doing workshops, creating awareness around the IFRS sustainability standards. So these are a number of resources that you can actually leverage on to close those capacity gap. And then there are technical assistance where you could align with organizations, global organizations like the Sustainable Stock Exchange Initiative, to learn how to embed some sort of the IFRS S1, S2. But the Sustainable Stock Exchange Initiative is actually for stock exchanges. So you as an entity may not be able to access that framework. But if you're listed, you can go through the Nigerian exchange to be able to leverage on some of the materials that is available. So with all of these resources that are available, I believe that anybody who is serious about understanding the IFRS sustainability standard would actually be able to get all they need. I personally would always advocate read. There's a lot of resources that is available. There are several webinars that are currently in the archives of ICAN that you can go on their website and listen to, pick up materials on IFRS sustainability standards and pick up the standard itself and study it.
Exactly. Wow.
Thank
For
you.
me, this is beautiful. This is
Thank you, my queen lady, queen mother. Thank you very much for being part of today's program. It's just a pleasure. It's been a pleasure listening to you and learning from you again on this program, ICAN on Air. Thank you very much. And we hope that next time when we call you, you'll be available for us.
Yes, up Swan.
Up ICAN and up Swan. Women of integrity. God bless you.
Thank you.
Thank you very
All
much.
right, Tosi, we are running out of time. We'd just like to take some of the announcement we have, because there's something that is very, very important.
I guess Netfom is that being a network glitch.
Use that.
Okay.
Oh yes, it's a big one.
It is.
All right.
Yeah.
So to mark the date, the investigation.
All right, I guess from is having a network glitch there. So quick announcement just to continue from where she stopped. I can proudly welcome Malam Hauda Umma Yahya MNI FCA as the 61st president-elect. And with decades of experience and a passion for excellence, of course, Malam is set to lead with vision and impact. Young Accountant Development Committee presents another free webinar tomorrow Friday, March 28, 2025. The topic is Shaping the Future, Leadership, Innovation, and Technology for Accountants in a Dynamic World. The time is 9 to 1 p.m. It attracts 2 MPD credit hours. Please ensure you join this program. Also, the 24th Fellowship Conferment Ceremony is coming up Saturday, April 26th, 2025 at Arbor Point. Ensure you go ahead and register. The online application closes by Saturday, April 12th, 2025. And certainly we also have the ICAN NPD accreditation fee has increased starting from January this year. If you are not aware, please ensure you are duly notified. And that's the program for today. You would agree with me, our colleagues, that today's program is worth the while. It's highly educating, is impactful, and very insightful. Of course, we praise Fatogbe FCA, who has been talking to us on our implementation of S1, IFRS S1 and S2. And that is the show for today. We want to thank you all for being part of this show. Thank you so much. I remain Tosin Akinwumi FCA, saying thank you for watching.
And I remain Fumi Olani. Thank you very much for watching, and congratulations to the president-elect again.